Well, hello and welcome to this Moneycontrol live stream. You're watching Earnings Express with me, Nandita Khemka. And of course, we're talking about FMCG earnings today, given the fact that HUL has reported its numbers and it was quite an unenthusing quarter, so to say. But I have with me Mangalam, Maloo, my colleague, to break down the numbers for us and of course to tell us what to watch out for when it comes to other FMCG giants as well. Mangalam, we all know that it was an unenthusing quarter for HUL. Yep. It's reflecting in the stock prices. Volume growth was a miss, but what are the other metrics that were a miss when it comes to HUL's earnings?
Well, there was a miss. There's no two ways about it. From the top line, grew about 6.1%. The street was working with a number of 8.5 odd percent. And once that happens, everything flows to the bottom line itself. What was positive was the gross margins. They expanded 260 basis points year on year. The street was bracing itself for about 180 to 200 basis points expansion. Why is it that then the EBITDA margin did not expand? Because the company took all of that and spent into advertisements. So ads as a percentage of sales have actually now almost touched 10%. So which implies one thing, that going forward, even the raw material price deflation may not flow down to the bottom line, because companies will use this to cut prices and also at the same time spend back on advertising so as to they can maintain their market shares, grow their market shares and grow demand and volume shares. The thing that stood out for me this time around from HUL was not the numbers but the management commentary. Yeah. They said consumer sentiment is improving, but, and that but was an important one, that competitive intensity is increasing as well. So with competitive intensity increasing, and especially in the mass products in some geographies, what happens is that they will take all the gross margin expansion and put it back into advertisements. So going forward, they will look at volume growth and not particularly EBITDA margins or net profits. They will look at volume growth and gross margins and use all the gross margin savings into ad spends.
Mangalam, since they are not taking any more price hikes, in fact, they are looking at price cuts, and volume growth, as we see, has decelerated compared to last quarter. Where will the top line growth really come in for HUL?
My sense is that the top line growth will come in from volumes itself. Price deceleration has happened across the industry. There's no two ways about it. But 3% volume growth in the first quarter is, a lot of it is also one-off. The one-off bit is in the foods and refreshments business. Why? Because remember, milk inflation was high. So as a result of which, if you're not buying milk, you're not buying Horlicks. Yeah. So that malt food business did not do too well. Coffee. There has been a price inflation out there. So there was no volume inflation there. Okay. In fact, as a result of which, there was just price hikes in coffee. Now that is coming off. Okay. Thirdly, there was unseasonal rains in summer. So the ice cream portfolio didn't do well. 75% of their business, which is beauty and personal care and home care, saw volume growth of 5 to 6%. Okay. It was foods business where the volume growth was absolutely zero or flat. As a result of which the overall volume growth was just 3%. So going forward in the second half, as consumer sentiment improves, chances are that you can see, high single digits or a little, closer to low double digits in terms of volumes going forward, and you add about 1% or 2% of price hike or premiumization, then you can anticipate about 10 to 12% revenue growth for the entire year. Question is how much of that flows into the bottom line.
All right, that was about, maybe the future outlook as well. But let's talk about the street reaction. Stock has, of course, taken a hit, not that big a hit, 2% down or thereabouts. But if you look at the street verdict, I know that Jeffries has, downgraded the stock, cut EPS estimates by 1 to 3%. But aside of that, has the street really turned cautious? There is no big EPS downgrade coming in on HUL.
There wasn't supposed to be, I mean, it is a modest quarter. It is not like a howler of anything of that sort. It is a modest quarter. Everyone was working with 2% higher numbers than what the company has reported, and that's why they've scaled back those 2%. Yeah. Right? That's exactly what has happened. The other thing that I liked about what HUL did was the insight that it had given to other companies as well. HUL said that competitive intensity has increased. So who is the other beneficiary here? Who are the competitors? You have Godrej Consumer. Yeah. We have Godrej Consumer's first quarter update, not their numbers. So Godrej Consumer has said that they've seen double-digit volume growth in their India business. They've seen cross-margin expansion of 800 to 1,000 basis points. Right. So does it mean that Godrej Consumer as a competitor is one step ahead of HUL? Which is what the stock price reactions are today as well. HUL is at the low point of trade, whereas Godrej Consumer is up around 2 odd percent. The third thing that we're watching out for is Godrej Consumer also has that trigger of them scaling up the recent acquisition that they did with Raymond, Park Avenue and Kama Sutra. So let's see how that pans out. And in terms of valuations, they're pretty much even Stevens. Godrej Consumer has a slight discount to HUL, but then also it has a lot more exposure to other geographies than HUL, which is why the discount is maintained. So these two are a pair that I'll be watching out for going forward. The second thing that I'll be watching out for are the media stocks.
Okay.
We are seeing all the media stocks higher in today's trading session. Yesterday, strong numbers reported by DB Corp. DB Corp is up 15% today. Sun TV is up around 5% odd. Going forward, we'll watch out for how Zee and Sony pan out as well with regards to the merger. Why do I say media stocks? Largely because all the FMCG companies, and FMCG is a large chunk of advertisers for these guys. FMCG companies are saying that ad spends are only going to increase going forward. Where do the ad spends go? To the media guys.
Exactly.
So we'll watch out for that as well.
Lastly, about rural demand, there was some bit of a positive commentary coming in on rural demand. So does that mean Marico and Dabur could see, you know, a better quarter or better FY24 going forward?
Well, we have the updates of both Dabur and Marico in terms of their first quarter. Dabur has seen improvement in rural demand. Marico said that we haven't seen any improvement in rural demand, though both of them remain hopeful of post-monsoon. So rural demand is something that we'll only speak about post-monsoon, first half. Usually it's, you know, better to not talk about rural demand, largely because it's difficult to guess how the monsoons will pan out, how inflation will pan out. HUL has said that there has been gradual recovery in rural demand, but that's also on a low base. Last year, rural volumes were down 4%. And this year, even if it's flattened out, the 2-year CAGR would absolutely be flattish. Whereas growth is still led by urban. So let's see how that trend pans out. Belief is that as we go forward in the second half of this year, also there'll be a lot more spending because of election-related activities. So that would in turn spur rural demand. If that happens or not is something we'll have to watch out for.
Perhaps some handouts from government as well.
Let's watch out for the second half. So second half is something that we'll be watching out for more than the next quarter.
All right, I think that was the verdict on HUL, and of course we'll be getting Mangalam back for other FMCG companies as well, as he is our in-house FMCG man.
I just try.
But for now, it's goodbye from me and Mangalam. Thanks a lot for watching. For more news, for all your other financial news and updates, stay tuned to Money Control.